All right, there we see oil prices there fell about 2% today. It's heading for a weekly decline. Brent crude futures is down about $1.92, about 2.2%, that's at $83.55 a barrel, while U.S. WTI crude futures, that's down $1.89 to $76.61 per barrel right there. Let's get a weekly review now and an outlook for next week. Join us now is Wachira Kariuki, Head Training and Research, Windsor Brokers. Join us via Zoom. Great to have you on the show.
Thank you, sir. Most appreciated. As Windsor Brokers, we're very happy to be here, sir.
Fantastic to have you. So it looks like oil prices are heading for a weekly decline. What drove sentiment this week?
Especially on the dollar, the Euro USD has been dropping, and it's almost heading to an all-time low of 1.0600. It's the lowest since in Europe, actually, this particular Friday. This entire week has seen new lows being broken. Of course, sentiment is driven significantly by the Fed Reserve statements that were released last week. There's a significant increase in the interest rates in the US. And the ECB also released a statement on the same, which has accelerated the decline. So we foresee the dollar gaining strength and the Euro USD hitting a new low. Actually, and also we've seen a significant increase in the US Treasury bonds. Their yields have increased. As I said, the interest rates have increased. So we expect a very consistent and persistent strengthening of the dollar against most currencies. The euro has been a significant decline. The GBP, the pound, has also lost significantly against the dollar. Of course, the USD has also hit a new high. As you know, there's a very strong correlation between euro dollar and USD. When one is a buy, another is a sell. So we are seeing significant hitting of new lows for the dollar as we continue forward.
Do you think the bears are in control of that oil market right now?
Completely. The oil market, as we speak right now, we've hit a new low of $76.11 per barrel. The very last time this particular price was hit was on 7th of February. So we have seen a significant decline. We have hit a 2-week low for the first time. It's dropped quite significantly. And more importantly, we've had 2 days back to back where we are breaking new lows. And now we've hit a low of $76.1 per barrel. We expect it to continue going lower. And maybe any trader holding sell positions, I strongly suggest they should just hold their positions and see how next week plays out, because for sure you're in the direction of the trend. And our analysis show that generally it continues to be a strong decline going forward.
All right, let's look at the metals market now. You know, gold has been in the news most of last year. It did have that, incredible rally. But now it looks like $2,000 per ounce gold is looking really tough right now.
It is. It completely is. We have hit a very strong, we hit $1,825 per ounce. So as the market has declined, gold, which had a very strong bull run last year, seems to have taken a bit of a beating. There has been a significant decline, and week on week, for the last 3 weeks, we have always closed lower. And this particular week, we hit a new low of $1,827 per ounce. The last time this particular price was touched was on the 1st of January. So we've pretty much erased any gains that we have had for the past 1.5 months. And that shows you that the bear trend may have kicked in, and it's kicked in quite early in the year. And our analysis, our research shows that it might be a significantly strong bull trend, and it might continue way into end of November before maybe it stabilizes. And there's a very strong support level around $1,803 per ounce is possibly the next possible support. Otherwise, we don't see anything stopping it, and we expect a significant decline week on week, day on day going forward. All bear trends, all bear positions are pretty much making a significantly good return. So,
and obviously, all eyes on the Fed right now. We've been, getting some, Fed speaks quite hawkish, at this point. But what kind of news do you see as a strong catalyst to take gold above that $2,000 level?
It would have to be something extraordinary, like you say, the Fed Reserve speaking about the interest rates. They increased slightly by 25 basis points. However, the sentiment was very clear that they do plan to continue with that particular stance. They said around March, April, in the next quarter, there might be another information release, market release, for which we think might stabilize the market or shake the market quite a bit. Therefore, we are, as of now, we are holding a bear trend, but short of a very strong sentiment from the Fed and making the market turn around, we think that market is going to keep on dropping for a while. The only thing that can stop in its bear run right now has to be a very strong sentiment. Alternatively, China could also, or Japan could also release a statement to strengthen the yen, maybe that could come up about. Otherwise, fundamentally speaking, we think it's a significant bear. Technically speaking, it has broken all supports. It continues to break new supports and find new levels, and we think it's while we do not give any recommendations per se as Windsor brokers, research supports that maybe the bear trend is significantly strong, and it will take quite a while, at least a month or two, before it is able to start retracing again. That's our short-term sentiment, sir.
And obviously, most of the investors in these markets looking at the US dollar. Let's look at the DXY. And now it looks like, is it starting some kind of uptrend again?
Yes, the dollar index has started some uptrend. As you very well know, the dollar index and the Euro USD have an inversely correlated. When one is strengthening, the other is declining. In fact, some people use the dollar index itself as a tool to be able to trade the euro dollar. So yes, the dollar index has turned around. It continues to find new highs. It's currently, let me literally just look for it in the market. It's finding new highs, and we're excited about what it might portend, because for as long as it's breaking into new levels, then that's a very good thing. So the dollar index week on week, right now it's trading at 104.49, which is a new high, because the last time it was at this price was on the 1st of January. On the very first day of the 2023 is when the dollar index traded at this particular price of 104.49. So therefore, it is breaking new highs. It has closed every week and in a new high. It has broken every high every week for the past 3 weeks. And therefore, we suspect it's a start of a very strong bull run for the index, which means a very strong bear run for the dollar. And we think it's going to, because the dollar is an average, the dollar index is an average of the strength of the dollar against all other currencies. We suspect it's going to be a strong bearish market for anything dollar correlated, and a very strong index continue to climb up from 104.49. I portend and I foresee this thing going all the way to 107 will be my next strong resistance on the weekly chart. That's my analysis, sir.
Yeah, I'm sure risk asset bulls wouldn't want to hear that right now. But what are you expecting next week for oil and gold prices?
I'll be. Today is a Friday, so there's some major news coming out sometime next week, in the middle of the week, I think. And so we are expecting to see, I suspect after such a strong bull run after 2 weeks, I expect that to be stabilizing and maybe a consolidation of prices as the people who had and held those trades for the last 3 weeks exiting, and then after that particular exit, the bear trend will most certainly kick in unless there's something to stop it. So I expect next week to stabilize, but as we go into the last week of February, I expect the bear drop to continue. Rarely have we ever seen 4 weeks of bear trend for gold especially. So we normally expect it to drop after 3 weeks, stabilize, start trading horizontally, start consolidating as people who had held positions start to exit, then the bear trend once again. It's called a breather on the technical chart. So we're able to see that people are exiting their positions. It does not necessarily change the trend, but it accelerates the bear trend after a while. Otherwise, nothing drops perpetually all the time. So a consolidation next week, then a drop in the following week, depending on the news that is coming out on Thursday and Friday next week, which is some major economic news on the dollar.
Yep. All right, thank you so much, Wachira Kariuki, Head Trading and Research, Windsor Brokers. It was great having your perspective today. Thank you.
Pleasure's all mine.